Guys, welcome back to another episode of Decoding IPOs by the Finance and Investment Cell of Kirori College. Today we have Gaja Alternative Asset Management. So Gaja basically operates in India's alternative investment industry, where it manages funds that invest in private and mid-market businesses. Coming to the IPO details of the dates, it opened on August 19 and it will close on August 1, 2026. The face value is rupees 5 per share and the listing date is August 26th. Coming to the type of IPO, it is a book build main board IPO. And moving forward to the issue reservation, it has allocated about 50% to the QIB, the qualified institutional buyers, and around 15% to the NII, the non-institutional investors, and around 35% to the RII, which is the retail individual investors. Moving forward to the GMP of this company, we have the GMP. Okay, as of August 2026, Gaja Alternative Asset Management's GMP is around somewhere between rupees 17 to rupees 2024. Currently it is rupees 18, and with the upper IPO price of around rupees 160, and we can say that the listing, it would have a listing price of roughly rupees 177 to rupees 184. So the financials of the company, if we see, for the assets, they have been increasing year by year. In 2024 there were 388 crores worth of assets, then after a year it jumped to 451 crores, and currently it is at 706 crores. So that is a great jump. Same with the total income, that has been increasing year by year as well. Same goes for the profit after tax, the reserves and surplus too, and the total borrowing has also increased, and it has increased a lot a year ago. The objectives of the issue, so the investment would mainly go towards the sponsor commitments which they have listed, including the investing towards balanced sponsor commitments like the Gaja Capital India Fund 2020 bridge loan amount, and the investing towards the sponsor commitments to the proposed fund. Then for the general corporate purposes, moving forward to the key performance indicator of this company, we can see the ROE. Last year it was around 17.19%, and right now it is 16.47%. so what we can conclude from this is that it is a good indicator, because above 15% is generally considered nice. Same goes for the debt equity. It is currently at 0.07%, which is excellent. This shows that the company has extremely low debt. For the RONW, same, it is really healthy, the 13.13%, and same goes for the PAT margin, is very high, currently 51.94%, 94% is also great. Price to book value, it is reasonable, but it would need a peer comparison. Coming to the peer comparison, if we see everything, the ROE of Gaja Alternative Asset Management is good, but it is lower than most of the peers. The debt equity ratio, however, is very low, which is excellent, 0.07%. For the PAT margin, 51.94% shows very strong profitability. Coming to the final verdict, fundamentally Gaja looks fairly strong, low debt, high margins, and relatively attractive valuations if we compare it to its peers. But the main concern is that the return on net worth is lower than most of its peers, but overall if we see it, it is relatively cheaper compared to its peers. So overall the rating for this IPO would be positive, and it is a good company to invest in. Thank you.